Would you buy this rejection candlestick? The buy didn't work. What about this one? Most of you will answer yes, but do you know the reason? Hello traders. Welcome to an episode of Trade Smart. Today, our topic is candlesticks and candlestick patterns, fundamental elements for any trader. While candlesticks represent the basic knowledge for traders, it's common for many to use them incorrectly. Mastering these can swiftly turn your trades profitable. Before we dive in, don't forget to subscribe to our channel, hit the bell icon, and give this video a thumbs up if you find it helpful. So, let's get started after the disclaimer. Understanding candlesticks is essentially understanding the language of market movements. But who's behind these movements? It's the big players, the market whales, funds, banks, and other major institutions. In this video, we'll dive into how these market movers influence candlestick patterns, and, more importantly, how you can use this knowledge to your advantage in your trading strategy. So, you all know the following candlesticks: doji, hammer and hanging man, shooting star and inverted hammer, and the list goes on. Feel free to pause the video to take a closer look at the specific information about each candlestick, but our emphasis today won't be solely on individual candlesticks. Instead, we'll focus on understanding what these patterns express collectively. It's not just about recognizing a single candlestick, it's about interpreting the broader narrative they collectively tell in the market. So, let's explore the significance behind these patterns and how they contribute to our overall market analysis. At this chart, we can see the doji candlestick, more specifically, the dragonfly doji. Now, if you check the previous slide, you'll notice that the dragonfly doji suggests a potential reversal to the upside, and indeed, that's what we're witnessing on this chart. However, let's put aside the name of the specific candlestick for now, and just focus on analyzing what's happening on the chart. Firstly, we notice that we're in an uptrend, indicating a potential buying opportunity. Secondly, this candle formed at a crucial support level, which also acts as a supply area. And thirdly, the price dipped significantly, triggering selling by many traders, only to be aggressively rejected and falling into a trap. But let's see how the trap looked before getting rejected. So, this is the candle that everyone was looking at before its close. A big red candle breaking the support, appearing aggressive and scary. And at the close, the rejection candle, a doji, appeared. Imagine how many traders started selling at this point. Now, think about it. Is it the candle that caused the price to rise, or the whole story behind this candle? Let's check out another example. In this case, we'll be looking at the hammer candlestick. As you can see, there are numerous hammer candlesticks in this area. Now, imagine if you were buying randomly at every hammer pattern, and setting the stop loss just below. Even if you caught this bullish move afterward, your stop losses or scratches wouldn't let you enjoy the profits. Now, why didn't these hammer candlesticks work? Because sellers came in too strong, and the price needs some time to reverse, even if the perfect candlestick patterns show up. It goes back to what we mentioned at the start. It's the story that matters. Let's see what candlesticks can we trust according to the story. So, can we trust this rejection candle? The answer is yes and no, depending on the type of trader you are. Considering we're in a downtrend and aiming to sell, in the yes scenario, you trust the aggressiveness of the sellers and initiate a sell with a potentially higher stop loss. In the no scenario, you opt to wait for a deeper pullback as the price is already quite low, and you want a higher and safer price to sell. Both of these approaches are strategically correct. It all comes down to the trader's preference and style. In my view, waiting for a retracement is always the better idea. This way, you can secure the best price possible, even if it means potentially missing out on the trade. Now, let's see how the chart unfolds. As you can notice, the candle worked nicely, and bears indeed were strong and aggressive, driving the price further down. Unfortunately for conservative traders, they never got their pullback. However, there are other opportunities to take advantage of the bearish trend to sell, like this one or this one. So, even if you missed the trade, stay focused and sell the next retracement, taking advantage of the candlesticks and the price action. Now, let's look at another example. Can we trust this candle and consider selling? Yes, we can trust it. We're in a downtrend, Sellers came strong and buyers showed weakness. Moreover, this rejection candlestick was formed also at a resistance area. All these factors make this trade a good opportunity to short. Now, let's see how the chart unfolds. As you can see, the rejection candlestick worked perfectly, and the price went for lower lows. This is a so-called gravestone doji, indicating bearish momentum. But after this analysis, do we really need to remember the names and their definitions? Or is it more important to read the story behind each candlestick? Let's check out another example. At this example, would you buy or not? This example is for the more aggressive traders because the sellers are coming in hot. The correct answer here is to buy. Firstly, we're in an uptrend with aggressive and strong buyers making their move. The price faced a solid rejection in this area, and right after that, buyers entered with strength. Now, we've got a support and a supply zone in place. Sellers attempted to drive the price lower, but found strong rejection at the support zone of these powerful buyers. Now let's see how the price unfolded. So, this rejection candlestick gave us a really good entry until the next highs, where our take profit should be because sellers are quite aggressive there. Now, as you can see, we have again rejection candles at this new support, plus we are making higher lows. The sellers couldn't even go at their previous low. So, combining all the factors we analyzed and taking advantage of the bullish trend, these candlesticks present another opportunity to buy now that we understand the entire story. And so, the price continues to rise. As you can see, we haven't assigned any specific names like doji or hammer in our analysis. Instead, we're interpreting what the price action is telling us and capitalizing on that information. Let's move on and see 4 more mini examples. At these examples, you can see some bullish and some bearish rejection candlesticks, but not all of them will work as they supposed to do. Let's see the first example. Sellers are gaining strength, buyers are significantly weakened, and a rejection candlestick has formed at the supply area. This not only signals a good selling opportunity, but also provides a safer spot for our stop loss. And so, bears take control and push the price lower. On the second example, we also have a bearish rejection candlestick. So will it work? The answer is no. First of all, sellers don't look that strong, and even though we are at a resistance area, buyers came too aggressive. So we can't trust this candlestick. And after that, the price unfolds on the bullish side. On the third example, we can see a bullish rejection candlestick. But can we trust it? The answer is no. Firstly, even though we might be close to a support area, the buyers are notably weak. Secondly, the market appears a bit messy, and when the market is in such a state, we prefer to stay away from trading. So, let's see how the price unfolded in this messy market. On our fourth example, things are easy. We have strong buyers followed by weak sellers, and a bullish rejection candle was formed. This is a nice opportunity for us to join the buys. And so, bulls took the price for higher highs. You can notice that when traded correctly, candlestick patterns can form a highly profitable trading strategy. The risk and reward that these patterns offer can be truly outstanding. Feel free to pause the video and grasp the logic behind each move. Then, head to live charts, identify candlestick patterns that have proven effective, and distinguish those that may have been traps. With time, your eye will become trained, enabling you to spot candlesticks that are likely to work, providing numerous opportunities to capitalize on the market and make profitable trades. After exploring these examples, it's evident that candlestick patterns work when the underlying story supports them. That's why it's crucial to read everything behind each candle, avoiding the temptation to see patterns everywhere and randomly jump into trades. Keep it simple, follow the trends, and let the story unfold. Now, it's time to put your new knowledge into action on the charts. If you have questions or insights, feel free to share them in the comments below. Give that like button a tap if you found this helpful, subscribe for more hands-on content, and of course, trade smart. Thank you for tuning in, and I look forward to seeing you in the next video.